In this video, I want to talk about maybe one of the most important things about ultra high yielding ETFs, ETFs that yield north of 100%, for example. I want to talk about and go over something that I think a lot of investors are missing out on as far as understanding and or maybe even potentially utilizing for their own specific strategy. Now, yes, generally speaking, names that offer north of 100% yield, take TSLY, the Granted Shares Yield Boost TSLY ETF, for example, that offers a 139% yield. These names are going to be somewhat risky because they're tied to an underlying, like Tesla, for example, which is pretty high beta. But even with the amount of risk that some of these ultra yielders do have within them, there's a specific strategy that we're going to talk about that may lighten up the load when it comes to risk or worry. So if you consider yourself a dividend investor, and especially if you're interested in high yield or ultra high yielders, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description, and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now recently I came across this post from Dark Miner on X, shout out to them. They said we have finally hit house money on our first yield max fund. Cost for 100 shares was $1,597. And the dividends now received for them, $1,605. Total return sitting at over 40%, but now things get wild. Now that my initial investment has been paid back, the total return is going to stack like crazy. So basically what this investor is sharing, they bought Coney shares a while back, Coney the ultra high yielder from YieldMax. They spent around $1,600 on the 100 shares of Coney, and as of right now, they've been paid back $1,600 plus. Now at first glance, this might not seem like anything all that crazy, but here's where it gets extremely profitable. Now because this investor, just probably after a year or so, has been paid back their entire initial investment, every single dollar that they now receive is going to be 100% profit. Now take TSLY, for example, the YieldMax Tesla Option Income Strategy ETF, an ETF that, to be fair, has decayed like crazy since inception. It's down 78.79% as far as price performance. But the crazy thing about TSLY, and some of you guys probably know this if you've been following me along for a very long time now, I personally bought a few hundred shares of TSLY back basically when I first started trading. I'd have to look specifically, but probably during February or March, I bought a few hundred shares more or less of TSLY. Now I sort of figured that TSLY was probably going to pay out a ton of income, but even back in those days, after investing into names like ULTY and others, which back in the old days offered high yields but decayed over time, I thought TSLY would probably also do that, which my assumption was correct. But the crazy thing is that over the next several years of holding on to TSLY, at times TSLY paid me $2 per share per month, and sometimes $1 per share per month. But regardless, my 200 shares of TSLY, which my average cost is around $15 per share, which as of right now, I am down around 50% because I've been holding on to the majority of my shares of TSLY for a very long time. I also have been paid back 100% of my initial investment, and I'm now playing with the house's money also. Now, the best way I can explain this strategy or the idea of playing with the house's money, once you're paid back your entire initial investment, the example I always give to investors if they're sort of unsure of what I'm talking about, consider you buy a piece of real estate that you're going to rent out to some tenants. Let's say you buy this house right here for $500,000 in total. Now, let's say in theory, after 1, 2, or 3 years, your tenants inside this home that are paying rent to you pay back your initial $500,000. And then at that point, every single month beyond then, you're still getting paid rent, but at that point, it's going to be 100% profits. Now, this isn't even the best example because with real estate, you still have fixed costs like property taxes, etc. But in the case of some of these ultra high yielders that have actually paid $10, $20, $30 in dividends since inception, they've actually paid back their investors their initial investment and then some. Now, even though the house money strategy still has its risks, this is exactly what I'm currently doing with ULTY with around $12,000 worth of a position, a very small portion of my portfolio relatively speaking, because this is still a somewhat risky strategy in my opinion. But I bought around 2,000 shares of ULTY for around $6 per share. Now, as of filming the video, ULTY is trading at around $5 per share, so I'm down around $1 per share, which is not all that great. But keep in mind, since I started buying ULTY, I've been paid out around $1 plus in distribution, so I'm not necessarily down all that much if you consider all the distribution payouts. But the bigger idea with ULTY and my personal strategy, I'm going to hope, wait, and pray that ULTY pays me back my entire initial investment in around 1 year. And that will be the case if ULTY keeps paying me 8.5 cents, 9 cents per share per week, which again is not necessarily for certain, but it's what ULTY has been paying for a while now. Now, if ULTY keeps paying out 8.5 to 9 cents per share per week with my 2,000 shares, in about 50 more weeks from here, I'll be paid back my entire initial investment. And at that point, even if ULTY pays me 4 cents per share per week, it'll be 100% profit, which is amazing. So I wanted to share with you guys the house money theory, the house money strategy when it comes to ultra yielders, because I think it's a strategy that's sort of slept on. It's still risky in a lot of ways, but trust me, as someone that has bought certain ultra yielders and now playing with the house's money on those positions, it feels pretty amazing. So now that we talked about playing with the house's money when it comes to ultra yielders, I have one last question for you guys down below. When it comes to ultra high yielding ETFs across the market as of right now, what's your personal favorite and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.